Welcome to the Indices, and here we're looking at the US Treasury notes, and as you know they do the opposite to the S&P 500. So currently from this low here, just on the 1 hour chart, we have this three-wave structure here. Well, it is three waves until this low here is taken out through here. So at 123.90 roughly, 89.90 area through here, if we get a move through here, then that will make that a corrective rally. And then we would see more downside here, and then that would give strength to the S&P 500. But while that particular low here is in place, then this market is still got a possible bullish rally happening through here. So it's just one subtle thing to observe anyway. Moving on to the S&P 500. The wave 4 rally that we're looking at here, the 38.2 retracement level back to 1920 area, is still in play. So we feel that this move down here is not complete. The wave 4 is not complete. And in drilling into this, if I go back to this chart here, sorry about that. So yeah, this rally, this little rally, even though it was positive on Friday, this little rally through here is not displaying an impulse wave. An impulse wave is 5 waves and it gives direction to the market. This little move on the 15-minute chart here for the S&P 500 would normally expect to bounce off the top of group 1, number 3 anyway, normally coming back to the wave to 40 and then dropping. But you can see here that we don't have like a nice clean 5-wave structure, an impulse wave, 1, 2, 3, 4, 5. This is more corrective pattern sort of stuff here. So basically an A and a B and a C here, or the A to here, the B to C, a B to there, and C to here, and then down through here. So we're viewing this as corrective and still have another move to the downside through here. This is the same for the Dow Jones as well. We had the 38.2 retracement level at 6,700 here, but I think it can come down further, because if this is a corrective move here, then we'd be looking down at 16,650 here to the wave 4 of 1 lesser degree here. So that's something that we're looking at here. So this bit of a sucker rally here, and once again it's not displaying impulse waves to the upside. It's more like corrective patterns. So probably a retest of 16.8 if that, and then I'd move lower. The DAX is pretty much on track for what we thought. You know, we had wave 5 of 3 here as a high here. We're looking for wave 4 back. Now, this wave 4 correction, if wave 2 is simple, then wave 4 is likely to be complex. It's the guideline of alternation which you find in nature, and that means that this move down here as wave 4 would be just one leg. They tend to move sideways anyway, so it could be something like this before we see any upside, just roughly speaking. But the little move off the low here for this market and the FTSE is in 5 waves. So we've got this move down here that can be counted in different ways, but I've counted as an A and a B and a C, and we'll be looking for an A and a B and a C back up. So I could put this here as the A, the B here, and the C here for the retest of supply level back up through to here. And just drilling into this here, you can begin to see on the 15-minute chart here, you can see a nice impulse wave up. You know how I was drawing those waves before? So nice 1, 2, strong 3rd, 4th, and 5th. So we'll get an A, B, C across here, and then another move up here. Even clearer here on the 5-minute chart here. So if you're tracking this up, it's 1, 2, 3, 4, and 5 up through to here. Then the A, the B, and the C here. And this is actually working with nice big number here. So look, move above this little reference point here would see on the long side through here, and you could expect a move roughly the same distance as here. Spike, I don't like spikes that much. So, but anyway, roughly into the 99.80, 99.72 sort of area through there. But you know how to trade through the subgroup here. 10, 20, and 30 is group 1, midpoint 50, and then group 2 here where the resistance will be. The FTSE's the same off the low as well, but a different picture, more like the Australian market here. And I've adjusted this top here, and this is what I've done here. First of all, in the bigger picture, we got 5 waves off this low here, okay, so up to here. Now, the second thing is the 50 and 60% retracement level is down at 6650, 6700 in that area there. So we're trying to figure out what type of correction we've got here, and because we've made a new low through here, we're sort of expecting it to come down from here yesterday. So it counts best like this, the A wave to here. All of this is an A and a B and a C here for the B wave, and then down for the C wave. One problem I do have here is in counting this 5-wave structure here. Now, the problem starts with, do we call this as the high in here, or do we call this move in here as the high? Because it will make a difference. It will add an extra wave to the downside. If we've got it here, then we'll have 1, 2, 3, 4, and 5 down to here, and we'll complete as such. If this is over here, then this will be down for 1 here, back for 2, and all of this will be the 3rd wave, then the 4th, then the 5th. Just drilling in here for the time being though, and I'll just leave that question mark up here, which is the actual top, this one here or this one here. Just taking it from here at this point in time, having a look at this is down for 1, back for 2 here, and then the 3rd wave down through to here and having 5 waves in it. And currently this 5-wave structure would be 1, 2, 3. The wave 4 is not finished just yet. Like the DAX, we got 5 waves up through here, so we'll have a 5, 3, 5 structure pulling back for wave 4. That's going to try and retest 6,800, and it may as well, not as well, but it may do just that. That's its job. So we'll just see how that goes, and we'll have a look at that in a moment. But wave 4 to here, and then when 6772, a 772 number, important, once that becomes the resistance, then we can look down for wave 5 of 3. Then we've still got 4 to make, and then down to 5 as well. So this is important because the Australian market is in the same sort of boat roughly as well. So just drilling into this a little bit further here, we can start to see, like the DAX, we've got the little 5-wave structure up through here. So we can call that an A wave, a B wave, and a C wave for wave 4 here. We would only go long, if we were wrong and we had to go long, we'd only do it with a really solid support on 6,800, okay? So that's something to look out for. It's always nice to know at what point, we need to change. But as it stands, an A and a B and a C for wave 4, and then moving down for wave 5 of 3 and 4 and 5 down into here. This is the 50% retracement level, roughly around the 6,700 here. The Australian market. Okay, now I just want to go over, because it's the end of the week, so to speak, I just want to go over a few things. This is a weekly chart. So from going back here all the way to the before we had the banking problem, from this point up through here, all of this move down through here, we're looking at this as the A wave coming down into the 2009 sort of area through here. We've got it as 3 waves, an A, B, and a C. So that means that this is important, because coming down through here in 3 waves makes all of this corrective across here. Okay, so the other point with all this, to me, all of this is just a correction, an overshoot pattern across the 5,000. So there's a classic trading levels pattern and an overshoot pattern. And this overshoot pattern here, the distance above, just above the medium level here, 6,500, a bit like the Dow Jones finding its low at 6,500 as well. So the distance above is normally the distance below, and that was pretty much the case except for 100 points down here. Main point is that this is, we're looking at this as wave A, and then we're looking at, because with a correction, as you know, this is what we're looking at here, we're looking at an A wave down, a B wave up in 3 waves, and then to the 61.8 retracement level, and then we're looking at 5 waves down for wave C, and then the move up from that point there. So where we are possibly at the moment is at this high here, okay? So this move up through here, this is the A wave, the B wave, and the C wave. So this is it here. This is the A wave. Then we've got the B wave in 3 waves, which is a little bit sort of debatable about where it actually finishes. And I don't want to get into that now, but this B wave here is either here or here. Sure, I don't want to get into an argument about that, but it's there somewhere. And then this is this leg up here. This leg here is the C wave here, and this is what we've been counting, pulling back up to the 61.8 retracement level of this whole bear market down through to here, which is basically where it is at the moment. Now, this move up through here, because we don't have a very clear situation on the low here, it's been a bit difficult to count all of this up here, and this is just one way of counting it, and it's also debatable as well, but it's not that silly either, because what we're actually looking at here, and you don't need to be an Elliott person to understand this, but it was, there's a big move up, and then the next move is even shorter, and then all these other moves up here are getting shorter and shorter and shorter. Do you remember? It's like an ending diagonal triangle, so it's basically showing an ending pattern as such. So it is important that and if once this, if this is correct here, and we'd probably be able to confirm this once 5,200, the pivot within minor level group 1 becomes the resistance. And if that's the case, then we'd be looking at a large C wave down here, and that would be in 5 waves. So we'd be looking at a 1, 2, 3, 4, 5, something large like this, if not lower. And so just drilling back into this top here and looking at this particular pattern here, coming into the top here, it would be like this here. This is wave 3 here, wave 4, and then looking at wave 5 in here, and this would be the 1, the 2, the 3, the 4, and then all the way for the 5 here in terms of 1, 2, 3, 4, and 5 completed here. I don't think this is the case, but I just want to just make people aware that it's a possibility, and we need to be mindful of that. And if the 5-2 became the retested resistance, then that would be the confirmation, but we would be able to pick it up before that as well, as such. But as it stands, we're basically looking for some type of correction here, and yes, it can come lower, and then we'll be looking for more upside. So on the positive side of things, what we're trying to do here in line with the FTSE and sort of, the US indices have got some pull on this in a general sense as well. We're basically trying to look at the end of this structure down through to here. Okay, so that's what we're looking for at the moment. So just enlarging this from this wave from 5,000 here, we're basically looking at this as up for 1 here, back for 2 here, up for 1 here, an A and a B and a C here, back for 2. So we're counting 5 waves down here. But as I mentioned in the bear market too, this 5 waves down here can also be a big bearish picture unfolding as well. So that's why we need to be mindful, and also to have an understanding of both situations, because we don't want to be a sort of some poor little critter being stuck in the headlights, so to speak. We need to act in a reasonable time. And to do that, we need to have a plan. We need to know what both sides are. So with this move down through to here, as I've been explaining with the FTSE, ours is pretty much the same as well. So the move back into the 5,400 area through here, I see this as corrective, and I still see that we've got another move down to come as well. Okay, it would only be sort of positive if the 5,430 became the support there. Now I also just see what other charts I've done here. I couldn't quite recall what I've done here. No, that's fine. But what I wanted to do here, if you don't mind, is just just have a look at this is the banking sector. This is the XXJ, and the XFJ is the finance sector, and you know that it's got basically the same pattern as well. So just wanted to point out here that you know these markets have basically been correcting here, okay, but it's been holding its own here, and as long as it sort of holds its own, we don't have any sort of sort of strong impulse waves to the downside in this particular sector, but it's something that we need to watch out for, because the ASX 200 is probably pulled by the finance sector more so than the mining sector, but we've got the mining sector, we've got this market here holding in a corrective pattern here that could get bigger and uglier. We've just got to kind of look for those points, those breaking points of weakness. But the material sector, the XMJ, which we'll look at now, is a different story. You can see that it's already broken lower here, and in this breaking lower through here, if we just not get into too much of it all here, but the 50-60% retracement level still down at 9,200 here, so this has still got it's still got more to unfold here. So we've got a finance sector that we're sort of asking ourselves, can it hold itself up there, or will the strength of this move down here, will it be enough to put a crack in the pavement for the finance sector, so to speak? So we need to be mindful of looking for those breaks there lower. We should find support in around the 9,500, from 9,500 here. There will be support here. 9,500 is a 5 is the second strongest number, so there will be support there as such. But every trend's got a beginning and middle and an end. So if I remove this here and we look at this move here, this would be something like this would how it would be here really. So this would be like an A wave, a B wave, and a C wave down here, and this would be wave 1 here, wave 2 here. So we'll get a bounce off the 9,500 here. A bit like the copper market, still bouncing off 300, up a bit and then down. So I think this will follow the copper market, and as base metals, well, it's all same, isn't it? But hopefully what we're sort of looking for here is a larger ABC pattern like this here. That's what we're hoping it to be. But if this larger ABC pattern here turns into like a 5-wave structure like this one here, 1, 2, 3, 4 here, and then 5 down through to here, then we've got a real problem with the markets at that stage, because this 5 waves here would deliver a bounce off the old lows or wherever they are over here, and be a bounce off here. But because it produced 5 here, it would produce another 5 here, and they would come very swiftly at this point, because it would be a 3rd wave down. So anyway, just putting the situation as I see it on the table. Nothing to hold us to as such. We just got to get past certain junction points to see where we stand with things. But yeah, so alrighty, cheers.